everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. Welcome back to Moneyline with Nancy. If you're just joining us, of course, we're turning the spotlight on a major policy development from the Central Bank of Nigeria, like I mentioned earlier on, and it's instead deep conversations in the financial ecosystem. The CBN, in a circular released last Friday, directed banks to hit pause on dividend payments, defer bonuses to their top executives, and halt foreign investment, at least temporarily. The goal, of course, they say, is to shore up capital buffers and ensure all full provisioning for regulatory forbearance and single obligor exposures. To help us make sense of the intent, the timing, and the broader market impact of this policy, I am joined now by Ugodre Obi-Chukwu, founder and chief executive officer of Nairametrics, and a keen observer of Nigeria's financial system. He brings a data-driven lens and sharp analysis to this conversation. Ugodre, good morning and good to have you on the program today.
Hi, Nancy. Good morning. Hope you can hear me clearly.
Yes, I can hear you clearly. Let's get started. Let's begin with the fundamentals exactly. What exactly is this latest CBN's forbearance policy asking the banks to do? And what does it compare to the post-COVID relief strategies that we saw a few years ago? And also, before you answer that, I would like you to, let's bring it down to the basics, because we are so caught up in this so much technical jargon. What is forbearance? What is single obligor limits? Then you go ahead and answer my question. We shouldn't expect that everybody understands what me and you know, what we study all the time.
Nancy, good question. Okay, so let's start with forbearance. So forbearance basically is a relief that the central bank provides to financial institutions that they regulate, which is banks, during times of economic exigencies, like when we had the COVID-19, in 2020, and then sometimes it does happen when there's a major economic shock or a recession or economic distress, just like we had in 2008 in the US. So typically what then happens is there are certain prudential guidelines that the central bank requires commercial banks to maintain. It could be maybe how their capital adequacy ratios, or the amount of capital that they're supposed to retain, and then how much provisions they are supposed to make from their loans. So, but because CBN knows that, or the central bank knows that, these are not normal times. These are probably, for example, when COVID-19 happened, we didn't know why that happened. Businesses couldn't perform. There was nothing happening in the global economy. So you would expect to see companies struggle. And so for that reason, the central bank now introduced that forbearance. Now, forbearance had been, of course, COVID happened 5 years ago, but let's remember that the remnants of COVID lingered up until 2023. And then we now had this exchange rate reforms and removal of fuel subsidy that again impacted the Nigerian economy severely. And so the forbearance was extended up until December. I think it was actually meant to be wound down last year. And I think the CBN now said, look, you know what, the economy is not where they want it to be yet. And so they extended it to June, which of course the month we're currently in. So it's meant to be extended till June 2025, based of course on some of the feelers that we get from banks. So that really is forbearance. But of course, single obligor limit basically just speaks to the amount of loans that banks can give to one lender as a proportion of the bank's net assets. And so for Nigeria, I think that's probably like about 20%. So what it basically means is that imagine if my total net assets or what I'm worth is 100 naira, and then I lend 50 naira to Nancy, then it means 50% of what I'm worth is with Nancy, right? So that is a risk, okay? And so if Nancy defaults, then it means that my entire net worth has just halved just because Nancy defaulted. But if I'd given the 50% of my net worth to a lot more people, say I give them 10, 10, 10, and Nancy has 10 and Nancy default, then it's just 10% of my net worth that's gone. So that's basically what it is. So CBN sets that to ensure that banks don't lend, banks curtail the amount of money they lend to a single borrower uh, as a percentage of what the bank is actually worth or the bank's net worth. And so these are just some of the prudential guidelines. And because of forbearance as well, or because of what happened during the COVID years, um, the central bank allowed some banks to reach that limit. And then let's also remember that a lot of these banks, just to also, retool from the challenges of COVID-19, a lot of them also invested in, technological upgrades as well. And then they, improve their technological infrastructure so that they can compete better, and then also had to invest in their own businesses as well, so that they can, also strengthen their operations and their capability to also make more money. And so that's what has been happening over the last 5 years. But the CBN has said, you know what, it's enough. I think that we now need to go back to status quo, which is why we've seen that circular that came out on Friday.
So do you think that that circular was more of like a proactive stabilizer or a reactive restriction from the Central Bank of Nigeria, given the fact that these banks have aggressively expanded and many of them have declared bumper earnings recently? Many of the banks, the Fugas, which we will get into shortly.
The interesting thing is that I think a lot of the banks already know this. I think that the CBN, from some of our sources, they have been in contact with CBN for better part of the last year. Remember again, Nancy, that despite the bumper profits that some of these banks declared last year, if you recall, the CBN did say that they weren't going to allow them pay as much dividend from those profits. And so, the CBN has actually been proactive over the last few months over regulatory forbearance. But it appears that it was important for the CBN to put it out because one, we are nearing half year, and you know that at the end of half year, immediately after half year, banks will meet. For the banks that pay dividend, half year, they would meet, and very likely that they could, of course, declare dividend. It was also important to CBN to also signal to banks that look, you need to fast track your capital raising efforts. And then it appears to me as well that the CBN is also saying, look, beyond the 500 billion capital that we've said that you should raise, you do probably need to consider raising a bit more, or perhaps retain a significant portion of the profit that you're likely to make. But I guess if there's anything ominous from all of this, Nancy, it is that the number of loans that the CBN believes may be difficult to recover in a short period of time because of the way we are where we are today in the economy, and so extending forbearance for that reason might just be kicking the can too far down the road. And so the CBN is saying, look, now that we have banks that have raised capital that are declaring huge profits, it's probably more prudent for us to get them to take provisions for some of those loans. And that's really what this forbearance means at the end of the day. It basically says, you know what, banks that, we've been telling you, we've allowed you not to provide for some loans that we think could go bad. Again, doesn't mean that these loans are going to go bad or these loans are not recoverable, but typically for prudential guidelines, banks, the CBN tends to allow banks or enforce banks to take significant provisions on loans that they feel might go bad. And so, because of forbearance, they allowed them not take as much provisions as they could. So, if I use that my Nancy example, if I was to take provision for the entire 50% of your loan that went bad for me, forbearance would allow me probably take 20. Okay, because they know, look, you know what, Nancy is going through hard times, it's happening across the economy and all of that. But in this case, if you're saying, you know what, we've had enough time already, I think Ugo is no longer at 100, it's probably now at 200 in terms of my net worth. So you can now take the full Nancy 50. That's basically what's going on here. So the central bank is saying, you know what, so take the full provisions for those that can take the full provision. Let's just clean up our house so that come 2026, when the bank capitalization exercise is
Capitalization.
complete, everybody is now on a clean slate. And it looks like that's what the CBN is trying to do here.
Now let's talk about the Fugas banks, because it seems
Yeah.
when the circular came out, all eyes were on them. The First Bank, UBA, GTCO, Access, and Zenith. How differently should we
Yeah.
evaluate the forbearance policy impact, on them versus the mid-tier banks? In fact, I saw a Renaissance report. I think it was on Nairametrics. I also saw that. Was it this morning?
Yeah.
Also, I read it, or was it yesterday or so? That fantastic report that Renaissance put there, and I saw that
Yeah.
Zenith had triple digit forbearance, talking about the impact. I'll come to Zenith in a bit because it seems, of course, Zenith is a tier one bank. But I would like you to look at briefly the impact on these Fugas banks.
Yeah, quite an instructive report. I think the first time they put out a report was in December, and so we did see it at the time. But I mean, it didn't look like it was anything that was major, And then once the CBN circular came out, we thought it was important to put out that report, aspects of that report, and so they have also updated it. And from what we've seen in the report, it appears a number of the Fugas Bank do fall within the forbearance bridge, as CBN does describe. Now, important to also note that some of the banks that we've also spoken to have sort of given us the impression that some of the estimates that they put out in their report might not be totally accurate as of now. But of course, Renaissance RenCap also did state that some of their reports, some of the information they get may also be slightly dated, or depends on when they got that information. So in case in point with Zenith, for example, the report did state that as of December, Zenith had about 1.6 billion or so in forbearance loans. But feelers that we're getting from Zenith is that it's probably in the region of $1 billion, not about 1.6 or so that RenCap had in their report. And you could also see similar things across, some of the Fugas banks as well, where they also have, significant forbearance numbers now. But I think for us, what we do also need to know is some of these banks would likely go past this. If there's one thing that we've known over the last few years, a lot of Nigerian banks are quite resilient, and no matter what you throw at them, they seem to always find a way around it. Last year, when they came up with the recapitalization exercise, it was like, where are they going to be able to get 500 billion from within such a short period? And then, hey, where are we? Two banks, Access and Zenith, raised the full 500 billion within a year. And so I think that for some of these banks, they would likely um, clear the forbearance, breaches by mid-year, by their half-year numbers. If you look at Zenith, for example, if you try to analyze Zenith's profits, probably you could be seeing a bank that might be hitting 1 trillion in profits by the first half of this year, by the time you declare a number. So pretty likely that they could close out, or they could clean out the forbearance loans by half of this year, worst case scenario, within the first 9 months. Now, the downside, of course, is whether they will be able to pay the sort of dividends that I guess a lot of their shareholders will be expecting, or like they did last year. But
Because
for
the
this,
issue would be, can you also eat your cake and have it? Because you're saying from your
exactly,
analysis that they will exit it sooner
yeah,
than later, and can they actually
yeah.
also pay as much dividends as their shareholders are expecting?
Yeah, so for shareholders, I think the message here is that, and I think from a lot of the shareholders that I've spoken to as well, and when I mean shareholders, from institutional shareholders, they do understand that, and a lot of them have besieged and that this forbearance could impact banks' ability to pay dividend this year. But they also understand that this is something that they all have to chew. It's a tough bone they all have to chew. They have to just bite the cherry, bite it now and know that they are done with it, and they can move on. Again, and they also could have potential upsides. A lot of these forbearance loans, from what we gather, are oil and gas related loans. Some of these oil and gas companies as well, not all, but some of them have also appeared to have restructured over the years. We do hear that some of those loans are performing, maybe not performing at the sort of levels that require that those loans are not fully provided for. But we do hear that some of them are performing, and then with oil price at 70 plus, could even be better days ahead for some of these companies. So while they've made provision now, there's also an upside over the next year or two where banks could also recover some of this money. So I think for their shareholders, they're pretty clear. It's pretty clear that they would also they would just bite the bullet now. It's better for them to bite the bullet now than wait till later. And so for the Fugas Bank, I don't think it's so much of a worry. There are for First Bank, I think First Bank also has similar challenges with Zenith. They probably would need to raise a lot more capital. I think that they have raised part of their own initial capital. I understand that they are looking at raising further capital through a private placement sometime this year. They've also made significant provisioning as well. A lot of these banks have made, I think by our estimates, Nancy, since 2023, Nigerian banks have provided for over 3 trillion in loans. And you know what's interesting? One of the banks that have done the most provisioning is actually Zenith Bank. Zenith Bank has done over 1 trillion or so in provision over the last 2 years. Followed by EcoBank and First Bank,
But mostly, of
or
course, to
First
oil
Holding
and gas,
Company.
like you mentioned.
Yeah,
You know.
mostly for, of course, a lot of those loans are oil and gas related loans, and power sector
Yeah.
related loans as well. Nancy, but that's also mentioned that, and these are the provisioning that we're seeing from some of these banks. So I think that it's good that this is happening now. We know that this is a central bank, of course, that is back to orthodoxy. So we're no
Orthodoxy.
longer, yeah. So we're now going back to how banking is meant to be, and so it's better that we have banks that are stronger, even if it means that we need to bite the bullet now, and that's basically what we're doing. And so, because stronger banks favors everyone, because then you can have banks start to do what we all want them to do, which is responsible lending. That's it.
Okay, two questions. Is it safe to say, since we're talking of the Fugas Bank, and we can zero in on Zenith, especially with the, what I raised earlier in terms of what I read on the Renaissance report that cash is king. So is it safe to say that perhaps Zenith and other Fugas banks could write off their entire forbearance linked exposure with perhaps their half year profits because of how well they are doing? Even many Nigerians are still saying the banks are the only ones making huge profits in Nigeria while the rest of us are suffering. Then what does it also say about the entire balance sheets of perhaps Zenith and other banks too?
Yeah. So, I mean, I can't speak for all the Fugas, but from the little that I know, so let's start with F. F, of course, is First Local. Like I mentioned, they are in the middle of capital raising. So our expectation is that they would have to raise significant capital this year, and then they would also have to, you know, clean up their forbearance from their profits. Base case estimates by first quarter of next year. I think that you would see them essentially clear their forbearance requirements. For UBA as well, UBA could likely exit by the end of this year, if not the third quarter of this year, from what we see. And I think the RENCAP reports already shows some of these numbers. If we come to GTCO, I think is one of the perhaps the only Fugas that has already cleared its regulatory forbearance. I think they, at least from the press release that we saw earlier in the year, when the company released this full year numbers, they did claim that they had cleared the regulatory forbearance. And of course, you see the CBN to confirm this. And then we come to Access Bank. Access Bank as well has fully raised its own capital. We do expect that they might need to raise a bit more capital because they're not as profitable as Zenith Bank. So they might need to raise a bit more capital, except perhaps the surprise of the significant improvement in their profits in half year. But pretty confident that the bank of that size should be able to clear this hurdle by the end of this year. As Zenith, like I mentioned, I think with the way their profit trajectory is going, Nancy, I would be surprised if they don't clear this
You're very
by,
optimistic about Zenith, and
by,
you're very
yeah,
optimistic that by half year
yeah. I mean, you
this
can
year,
look
that
at,
is at the end of
yeah,
this month.
yes, yes, yes. I mean, I think it's just by clearly looking at their numbers. If you look at Zenith's numbers, um, first quarter of this year, profit after tax was 300 billion. First quarter of this year alone, and so analyze that you're looking at a bank that can probably do 1.2 or 1.3 trillion in profits. And let's also recognize that they did also provide for about 50 billion, if I'm not mistaken, in the first quarter of this year alone. So it's likely that with the sort of operations that they have and the projections that we've been seeing, they could have enough profits to meet these regulatory forbearance. Then also remember that they also have been one of the two banks that have raised capital complete. They met the regulatory the 500 billion naira capital that the central bank put in for them. And of course, so also remember that Zenith also has net assets in excess of 4 trillion. I think they're probably the bank that has the largest net assets of the Fugas. And so these are some of the things the numbers that you see, and you're confident that, you know what, they could probably clear this by the first half of this year if they want to. And that's why I said worst case scenario by the third quarter of this year. And
What
I
do
think the
you
same goes
Okay.
for most of the other banks too.
What do
Yeah.
you think will be the evaluation impact, especially on their market perception around share price? Talking about Zenith now, since you're still talking about
Mm,
Zenith, and are you convinced
mm.
that perhaps that it will still retain market dominance post forbearance as we close?
So,
Yes.
I mean, we did see, yeah, early on yesterday when I haven't checked pre-markets or markets
The
today,
bank share prices
but
yesterday
early,
went
but
down. They were all
yesterday,
bearish.
yeah, yeah, they
Yes.
did fall to as much as 7%, but they did claw back to about 3%. They closed 3% lower yesterday as people started to digest the impact of some of the reports that we have, and so. I think it's very likely that the impact I don't think will be severe, probably slightly muted. I think that what you would likely see is that a lot of investors price in what it means not to probably pay dividend in half year or to pay lower dividend. Now, and the part I also need to make, Nancy, is that a lot of these banks as well do have subsidiaries that could still upstream dividend to the whole co. So even
Okay.
if they are banks, yeah, even if the banks themselves don't pay dividend, there are subsidiary companies that are profitable who still upstream dividend. So it's not like you might not see dividend at all. You could likely see dividend. It might not just be as robust as it
As
was
it
last
was.
year or a few years before. Yeah. And so back to the share price issue. Yes, it's likely going to impact share price of some of this bank, like we've seen yesterday. And it could be topsy-turvy over the next few days as investors continue to digest the information that they're seeing. But all in all, our banks are lowly priced already. Most banks are trading at 50% or so of their book
Is it a
value.
good time to buy?
Most banks are also, that's it. It's always a good time to buy. Yes, yes. I mean, for me, you know me, I'm a fundamental investor, so I
Yeah.
always like to buy when I
When
see share
prices are
price going
low.
down.
Yes.
Yeah, because when prices are low, the only place you can go is what? Is up.
Is up. All right. I think we'll leave it at that to go. Let's continue to watch the situation, of course, perhaps in terms of cash recoveries, provisioning adjustments, and some of the other issues that will be coming out in weeks and perhaps months to come. Thank you again, my friend. I'll see you soon.
Thanks, Nancy.
All
Always
right.
a pleasure.
All
Bye.
right. That's Ugodre Obi-Chukwu, the founder and chief executive officer of Nairametrics, and we'll try as much as possible to break down, you know, the CBN's policy on forbearance. We'll be doing more of that again as we go on this program. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.